Welcome to another episode of the Property Nomads podcast. And today we're looking at basic budgeting. Get it right and you can watch you and your business flourish. Simple caveat before we get started with this is I'm aware as a business owner myself that there is various softwares out there, Xero, etc., QuickBooks, etc., to help you do this within your business. But not everyone does it as an individual or as a household. And that's quite concerning. So there's a couple of tips in this episode to help you with that as well. And the reason this has come about is recently I actually sat Martin Lewis's Academy course, I think he called it, on the Open University. Completely free, took about 12 hours. It was actually really good fun. I'll be honest, I knew quite a bit of it, but I didn't know all of it. And I went in there with an open mind and I really enjoyed doing it. So some of the information comes from there as well. But first of all, we should start with why should you budget? Very simply, if you budget properly, then you'll end up with surplus income, or you should end up with surplus income, and you'll be able to live within your means. Now, I say living within your means, you know, if you earn £1,000 a month and your expenses are £900 a month, great happy days. You know, if your income's £100,000 a month and your expenses are £30,000 a month, you know, it works with different things. But the key thing here is creating a good habit. It's creating a good habit. Before we crack on with a bit more of that, I will say that the one key book to read, if you've not read it already, I recommend you get it off Amazon. It's very short book, fundamental book, is The Richest Man in Babylon. I highly recommend that you read that book. There are 10 principles, I think, in there about Babylon and how and why its citizens became so rich. There's some basic principles in there as well. First principle, or one of the principles certainly, was do not spend more than you earn. Very simple, but it's very easy to forget that nowadays. You know, it's credit is very easy to come by. There's a lot of good debt out there. There's a lot of bad debt out there. You shouldn't be scared of debt at all. Definitely shouldn't be scared of debt. If you're scared of debt, maybe a property business isn't for you. Because having a property business or having that debt is good debt. You buy an asset, over time, you let the value of that rise. You refinance or you do whatever. It's good debt to have. It's about getting your cash flow right. But, you know, if you're earning £1,000 a month and your expenses are £900 a month, again, we'll go back to that example, but then you take a payday loan because you want to go to Dubai for 3 weeks and it costs £5,000, that's bad debt. That's not sensible. It's not a great thing to do. So you've got to avoid stuff like that. It's very easy to get into those habits because most people, you know, again, we can still say this in, you know, at this time, yeah, people are still locked down, people are struggling to get out and about, and, you know, that issue's building up. And there could be a massive flux, you know, when we're allowed to go out and about and go on all these holidays again. You might just see this massive flux of people, you know, making use of bad debt just because they need to get away, go on holiday, etc. It's quite dangerous. So you need to budget properly. You need to always make sure that your income is more than your outgoing. Your business is always going to be a reflection of yourself as well. So if your business isn't doing well because your outgoings are more than your income, is that the same in your personal life? If that's the same in your personal life, then it's no surprise. This is why it's very sensible to make sure you're budgeting properly first as a person, and then you'll find that those traits and those good habits that you build up will be reflected in your business. So it does work both ways. And this is, you know, the key thing. That's what reinforced me when I was going through this Academy course at the Open University. Very, very good. Really, really enjoyed it. Do recommend it. As a property investor, or even if you're not a property investor, but if you do invest in property, you kind of know how this works. You know, you get told, get assets to pay for your liabilities. Yeah, absolutely. You know, the whole point of obtaining property, whether it's leaving a legacy or, you know, you don't want money in a pension pot or whatever, that's absolutely fine. The whole idea is to get assets to pay for your liabilities. At the same time, I would advise not necessarily always trying to keep up with the Joneses, as in, keep moving up a step, up a step, up a step, because you just need more income to feed more expenses. It's not something I'm a massive fan of doing personally, but I understand for many people it's perfectly natural. So the whole point of property investing, you get assets to pay for your liability, you use good debt from the bank to purchase assets, cash flowing assets that will yield very well, hopefully for yourself, your business, your family, your legacy in the long run. So there's nothing to be scared of when it comes to debt, but it's just recognizing the difference of good debt and bad debt. If you don't know the difference, again, go through the course or Google this sort of stuff. Have an understanding of how these mechanics work. Very, very important. So you might be thinking, well, Rob, that's okay. I'm okay in my personal life, etc., etc., etc. Well, okay. If you are okay, then absolutely great. Not an issue. Well done. But do you know off the top of your head what your expenses are per month and what your income is per month in your personal life or in your business on how it should look? Because if you don't know that, then you're not up to date. You need to be up to date. You need to know this stuff pretty much off by heart. Create a mammoth spreadsheet. Top tip number 1. Get a big spreadsheet, okay, and work this all out. It's all happened to us before. It happened to me many, many years ago that when I was working, you'd be working, I save a little bit, go have a few beers, go on holidays, etc., etc., etc. And if an unexpected bill came out, again, back in days, I used to buy my cars, run them, and then I always used to complain I didn't have money for, service or MOT or, a broken part or something happened because I hadn't budgeted for it properly. Because I didn't know this stuff, 10 years ago. I wasn't aware of it. It was not a skill that, I've grown to have like I do now. So you've got to budget for all these different things. Don't just, if you've got a car, for example, if it's not a lease car, if you've got a car, don't just put car down as an expense per month. You need to divide that down. How much fuel are you putting in? When's your service due? What's your fuel per month? When's your road tax due if you pay road tax? When's your road tax due? Do you have a reserve account for if you need a new set of tyres? Stuff like that. So you need to really get this down to, bare bones as such. You need to divide up into as many categories as possible. The collecting of data over time is going to be crucial here. But when you budget, what I do on my spreadsheet is I'll have 4 or 5 tabs at the bottom. So, one for 2020, one for 2120, etc., etc., etc. And then the big spreadsheet I have is for each month. So I've got each month lined up. I know what the income should be. I know what the expenses should be. But in that, and I sometimes do this at a weekend, I'll play around for a couple of hours and try and budget accordingly. I'm not going to go into like 6 stages of debt or, stuff like that. I'm not going to, claim and sit here and say, I am a guru of all things finance. I'm not a financial advisor. These are just things that I've learned that have helped me, and I believe they can help you moving forward as well. I'll keep referring back to Martin Lewis's, Money Academy and stuff like that, because there's so many great lessons on there. A common question might be, well, what if I've got high interest, credit card? How can I sort that out? Martin can go through that with you as well. But normally, first rule of debt, a bit like Fight Club, apart from not talking about it, actually you should talk about debt, to be honest. Ignore what I just said. First rule of debt, get out of debt. Of all bad debt, all toxic debt, etc., etc. And always focus on the highest amount of interest as well. So, if you, I don't know, for example, if you owe, let's just say you owe a credit card, $5,000, but it's at 0% for 12 months. Well, pay your minimum or just above the minimum as well. Great, happy days. But then if you've got a credit card that's £2,000 that you owe, but it's at 20% per annum, get that one paid off first. That's, rule number 1 there. Now, the reason for doing this, and again, not just for forecasting for the year or maybe a couple of years ahead or so forth, is it creates a good habit. So we're trying to eradicate bad habits here. We want to create good habits. This is why this is important to do. The reason for that is that when surprises come up, that you won't get stung by surprises. Again, if you've attended a property course or you've listened to stuff we've said on the podcast before, this is why you have a MO account, monthly operating expenses. That is why you have a mow account. You put 10% of, or some people put 10, 15% of your gross rent into that account. For example, at the start of the year, we had a boiler that blew up in one of our properties. It's a bit of an old boiler. It needed sorting anyway. Boiler blew up, got a quote for the new boiler, etc., etc. We had a plan for the boiler to go wrong, but the money was in the reserve account, sat there. The work got authorised, the tenant was happy, new boiler's in there, 5-year warranty, happy days. There was no panic, there was no, oh my God, we've got to find X amount, where's this coming from? It was a very simple conversation. Okay, that's what the mow account's for, take it out of there, no issues. Nice, cool, calm and composed. Same in your personal finances as well. However you structure your finances, you might be working full-time, property's a side thing, maybe all the properties are in your own name, whatever. Put some money away, siphon some money away, to cover tax bills. If you know that your tax bill is going to come, normally pay your tax at least by the end of January the 31st. So budget for that. If you decide to work with HMRC and split it into a January and July payment, again, budget for that. Don't let these things catch you off guard. That's the key thing here. Don't let all this catch you off guard. Same thing with like Christmas and birthdays and stuff like that. Again, depends on your mentality and so forth. I try not to give in to peer pressure. If people want stuff for Christmas, I'll think about it. I'm not overly sentimental anyway. I know it might be difficult. As I say, it depends on your circumstances, but don't always try and give in to peer pressure. Just because next door's got a nice set of, diamond earrings doesn't mean that you have to go out and buy a set of diamond earrings, especially if you're not in a position and you've not budgeted for it. If you can afford it because you've budgeted for it, happy days. All these things to take into consideration. As I said at the start, I'm not a guru of this stuff. I'm not going to claim to be a guru of this stuff. There's many books and podcasts that you should listen to and read to. The Money Podcast by Rob Moore is a very good example of a podcast that you should listen to. The key book for me is The Richest Man in Babylon, just because there's some fundamental lessons in there that you should take on board as well. And don't be afraid of debt. We shouldn't be afraid of debt if you're in property anyway, because if you use debt wisely, you're going to have a great time using it wisely. It's just when it comes to the bad debt and the psychological decisions about bad debt that can lead us into quite a few issues. And it is what leads a lot of people into a lot of issues. It's why you see when people win the lottery, for example, a few years later they're skint. It's because they don't have that financial education. They don't have that information of how to budget, etc., etc. You win £1 million on the lottery, what do most people say? Oh yeah, I'm going to go on holiday. Oh yeah, I'm going to buy a new house. Oh, I'm going to buy a new car. Oh, I'm going to take all my friends and family on holiday. 5 months later, they ain't got a penny to their name and got a pot to piss in, so to speak. And that's dangerous. That's because it comes from education. So, basic budgeting. Do it because it's important. Do it and be constrained, control yourself, because if you can control yourself in your personal life with this sort of stuff, you will be able to control your business properly. If you're doing it already in your business, and again, there's stuff like Xero and stuff to help you in your business, great, then transfer that skill into your personal life. I use a big spreadsheet, to be perfectly honest. That's what works for me. It works wonders for me, keeps track of everything as well. That's what I'd recommend you do. This is about creating good habits, eradicating bad habits as well. Again, just as a reminder, check out the Money Podcast by Rob Moore. For book, check out The Richest Man in Babylon, and also check out the Martin Lewis Academy course at the Open University as well. It's completely free. So hopefully that will help. Hopefully you can take some inspiration from that. Do take time to do this if you haven't already done so. It's helped myself an awful lot. It's helped Aaron as well over the years and other people as well. So hopefully it will help you. Until next time, I'll be the same.